Yesterday, we spoke about the potential for a little bit of a relief rally. The question is it done, or are we going to see continuation towards the upside? We'll talk about this in today's show. I also want to speak about specifically 3 clear signals that you're going to need to see to know if the crypto crash is officially over, or are we going to be going back down one more time? So smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. Let's get straight into the show content. If you do look over here at 𝗏𝗏𝗡𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏, well, yeah, it's a little bit of green, right? So nice, a little bit of green coming back into the market, but still very, very, very short of reclaiming some key levels. There's a lot of work to do from the bulls. We'll have a look at what the levels look like. This depends on, of course, if you are looking for short-term trade opportunities, or if you're somebody that's maybe caught still in spot positions that maybe you want to offload, then stay until the end, because I'll show you exactly where to do that. We'll also have a look at the stock market. We'll have a look at MicroStrategy, which has been one of the short trades that we're in as well. A whole lot heating up over there where, a lot of people are trying to boycott essentially JP Morgan, which has been bearish against MicroStrategy, and trying to maybe orchestrate a little bit of a short squeeze over there. So we'll talk about that as well today. Stay until the very, very, very end, right? Look at that. DXY still moving towards the upside. So if you're in a cash position and you're long dollar or long USDT, well, the trend is starting to shift towards the upside. So you should be pretty well positioned over there. As for the stock market on the 4-hourly time frame is still putting in lower lows and lower highs, and really the level to reclaim is still the same, the level that we outlined last week, and that's about 6,800. So really what you're looking for is price to still come down, put in a bit of a high low, then recapture the yellow box over there. Until that happens, this is a downtrend, lower highs and lower lows, lower highs and lower lows, and you still need to at least print a little bit of a higher low to shift that, and then maybe you can recapture the 6,800 level, which is not only the previous lower high, but it also so happens to be the horizontal SR flip region, which you don't want to see flipping into resistance, which is currently the case, right? So keep in mind that if you are long on crypto, it comes with extreme risk, because if the stock market is moving towards the downside, it's very difficult for crypto to have any kind of a sustainable rally over there. If we look at the Dow Jones, well, very, very, very similar. The level to reclaim is 46,888. Nothing has changed on that front. And then we got QQQ. Lower highs and lower lows, and level to reclaim over here is 614. Until that happens, it is a little bit of a risky situation. There are some of the Magnificent 7 stocks that are rallying nicely over here. For example, Apple trading very close to all-time highs, so that's not too bad. NVIDIA still lower highs and lower lows, breaking below the key level. So this is one that's showing weakness, probably one of the most important ones to pay attention to, because in terms of weighting and how it affects the overall stock market, this holds a massive weighting. Remember, NVIDIA alone has a bigger market cap than pretty much all of crypto. If we look at Tesla over here, also lower lows and lower highs. The line in the sand over there that you're looking to defend is at that 411. That's a key zone. Meta aggressively marking its way down, lower lows and lower highs. Google, one of the few that's in an uptrend, right? So still high highs and high lows, price discovery, new all-time highs, nothing bearish about that one. MicroStrategy starting to, Microsoft starting to roll over, looking bearish over there. And then we have Amazon just kind of holding up, but we'll see what happens after Black Friday, right? Amazon sales tend to pick up massively. Maybe you'll put in a little bit of a rejection over there. And then moving on to MicroStrategy, just yesterday, actually, if you look in the Whale Room Discord over here, I said I'm going to be taking 75% profit on my MicroStrategy short here. Huge profits. Going to be re-adding those profits from the short trade higher up with that 75%. And I'm just leaving 25% on the table in case I'm wrong about that bounce, right? So that was right there at 173.79, absolute banger of a trade. And pretty much since then, MicroStrategy has started to bounce. And since then as well, you've started to see things come out now that they might try and orchestrate a bit of a short squeeze against JP Morgan, which is apparently short on MicroStrategy over there. And if that does happen, well, we pretty much closed at the bottom, and then we're going to be looking for the bounce, which will still be a lower high. And then we're just going to take all those profits, that 75%, that money bag over there. We're just going to reallocate that back in on the next major lower high, right? Because this has been down only. So there will be a bounce. So this is the value, by the way, guys, of being in whale room. Sometimes I'm not able to update these things until the next day. So now, alternatively, you're going to have to wait, for example, for this YouTube show, at which point by the market open here, you might be having to cover 12% higher than what you did if you were there in whale room. So that's MicroStrategy over there. Quick look at Coinbase. Also, lower lows and lower highs can easily put in a bounce. You got underside resistance coming in at about 300, so that's one level to watch. And then we have Circle also putting in lower lows and lower highs, a little bit of a bounce over here, but still very, very, very bearish. And then Robinhood looking similar to crypto in the sense of its bounce over here that's taking place, but I think a lot of structure has been broken over here on Robinhood, so it's probably also going to come down over time. So those are the main things. The next most important thing that you need to look at and that you need to focus on, it's one of the clear signals that you must focus on to know that the crypto crash is over, and that would mean you need to break down the symmetrical triangle. So we saw the first good thing over here yesterday, which I also updated in the Whale Room Discord when it was happening. That was the rejection off of this downsloping trend line over here, and that allowed for a little bit of an upside move on Bitcoin, which we also took a long trade on in the Discord yesterday. But now you need to see a proper breakdown, which would look something like this. You can see this supporting trend line over here. So you basically need this to move up, reject off there, come down, hold underneath both the 50 and the 200 EMA on the hourly time frame. That should roll things over, and that would lead to a little bit of a continuation pump, maybe a short squeeze within the overall crypto sector. Until then, you need to be incredibly cautious because symmetrical triangles are most likely to break in the direction of the prior trend. And the prior trend, if you zoom out, is clearly towards the upside. This is just higher highs and higher lows coming into a symmetrical triangle, which means there's a good chance that this breaks out. If this does break out, then your next potential rejection zone on USDT dominance is going to be around that 6.5% level. And therefore, any long trades that you have on the table right now, if you did take that trade in the Whale Room Discord that we gave yesterday, the long on Bitcoin, you probably want to move your stops to break even and eliminate any of the risk. You shouldn't lose anything until this confirms the breakout, right? Because we took the long trade off of that on Bitcoin, right? So the short on USDT dominance equaled the long trade on Bitcoin in Whale Room. And ultimately, as soon as this breaks out, now your stops are at break even. If this confirms the breakout of the symmetrical triangle, you'll basically get out of your Bitcoin long trade at break even. And then this is going to continue up. Bitcoin's going to continue towards the downside. So that's one of the most important things to focus on. This is a very key level. Remember, test 1, 2, 3, 4, breaking a long-term downtrend over there. Very, very, very aggressive by the bulls over here. And even though it looks like a little bit of a swing failure pattern in the sense that you have that beautiful wick on the weekly scale, it's not necessarily guaranteed. It's still low probability that this will reject and come down, and higher probability that instead this will make its way up because the bulls have a lot of momentum over here. And the next level to watch out for on the weekly is 7.8%. So a lot to look at over there. Let me just see and reset this over here. We did have 1 or 2 issues this morning. I'm not sure if we're going to get all the data we need on the Whale Trades website. I think the dev is working on it right now. So apologies about that. We can't look at that yet. But one of the things that we have seen as well pick up a bit is the negative funding, right? So negative funding is one good sign. But if you do look at some of the prior times that you had negative funding, oftentimes shortly after you can put in new lows, right? So I think the real chart to study is going to be this USDT dominance for today on the hourly. Just monitor this on the hourly. And I want to show you as well in terms of a timing label, right? If we have a look over here and we simply just mark off a vertical line, you're going to reach the apex of that by Wednesday. So by Wednesday, we should have a decision in terms of which direction this is going to break, either up or down. If it breaks up, bearish for crypto. If it breaks down, bullish for crypto. So what is the next thing that you need to see, right? This is more high time frame, and it's looking at the total cryptocurrency market cap. Even if you do bounce from here, very high likelihood that you're going to reject from around this $3.6 trillion mark. And then that rejection would still need to come down and form a high low. And again, if you start to look at that timing trajectory, this is going to take a long time. This may only come by Q2 of next year, right? Q1, the end of Q1 next year, beginning of Q2 next year, that you might reclaim these levels. So the only way that price goes into new all-time highs is with a lot of time passing in the form of, reaccumulating. So you need this long-term reaccumulation. I want to always level with you guys and be completely honest. I think the most likely outcome is, if you're lucky, you get a rally up over there and it's going to break down. And if you're unlucky, you don't even rally, you just consolidate sideways, creating a massive bear flag over here, and then it's going to break down. Those are the two most likely outcomes. I'm just being honest with you. That is the way that it's probably going to work out. So in order to shift this, basically what your hopium case is: a rally up, a rejection, price comes down, sets in a high low, which is only going to be in Q1 of next year. That might be enough time and opportunity to reaccumulate, and then you can continue up and recapture some of these levels. Is it possible that you V-shape out like this? It's possible, but is it probable? No, it's not probable. It's very unlikely that you do something like that when a lot of key levels have been lost. So just lining that up with Bitcoin as well on the weekly scale. Remember, my very, very idiot-proof, simple strategy and system is: if price is below the 21 EMA, you out the market. If price is above it and it's angled towards the upside, which is the yellow moving average or exponential moving average on the weekly, then you're in the market. So again, signal number 2 that you'd look for to confirm that the correction is completely over and it's going to take a lot of time: probably rally up, put in a bit of a high low, recapture the 21 EMA and curl that back towards the upside, flip that into support. Again, what is the scenario over here? It means a lot of time has to pass, similar to what I just showed you on the total cryptocurrency market cap. Even if the bullish case plays out, the most likely outcome is that you're only going to have the answer and confirmation late into Q1 of next year, which is around February, March next year, is only when things will start to shift. The probability of rallying through like this, V-shape recovering, and then just mooning is very unlikely. It's probably not going to happen. The most likely outcome, again, is either rally into this, reject. The death cross between the 21 and the 50 is going to... they're going to cross junctions over here around, if you follow this trajectory, the 3rd week of December. So by the 3rd week of December, I do think that, like a magnet, price could rally into there, but then you're probably going to reject, and that is your better case scenario. It's also possible that you just, like total cryptocurrency, bear flag over here, move sideways, and then break down, right? Unfortunately, that's the truth. I'm just being honest with you guys. And then, of course, we have the parallel channel time being spent underneath that. So yes, there is a possibility for short-term short squeeze, shorts that are going to be covering their profits from early on, and then late shorts that are jumping into the market might get a little bit squeezed out. And the way that we decipher this or understand if this is taking place is based on the funding, which you can see as negative, right? That's how we know that there's shorts present in the market. That's one way. And then we can also check over here. Let's just quickly go back to that and have a look in Whale and just double check the high block capital institutional charts. Okay, in this instance, in the very short term, they're actually looking to chase this pump over here. Positive on Bitcoin, positive on ETH, positive on Solana, was positive as well on SUI, negative on Sonic over there, and negative on Aster. So Aster and Sonic are still dominated by the bears over there. But anyway, moving back to this, the fact that you've broken this long-term parallel channel over here on the 5-day time frame, and the fact as well, and I'm going to remove that to clean things up a bit, the fact that you're sitting below those EMAs and they're spreading away from each other just shows you that the bears are fully in control. So what does this mean? I think that what it means is, unless you're a highly skilled short-term trader, meaning you focus on very low time frames, it's incredibly risky for you to attempt to play this bounce, even though it can elicit a 20% move. I think that you're better off sitting on your hands in a cash position and riding the DXY towards the upside. At least this is my main plan for myself over here. And again, just showcasing how things will probably move up into these rejective areas around the 50% level in the golden pocket on both total and Bitcoin, and how that lines up over here with this chart and what's most likely to occur. I've drawn it out, right? What's most likely to occur over there is a head and shoulders pattern. You have an almost perfect neckline that's forming over there. So you've tagged it. We said it could come as low as about 74,000, but I think that's good enough. You've tagged that. So generally, you may have a choppy move towards the upside, but there's no guarantee that this happens, right? Head and shoulders pattern is just speculation that you have the left shoulder, you have the head, and you'll form the right shoulder. This is like the more bullish outcome, is that you put in a dead cat bounce that's going to reject between $100,000 and $105,000 to form your right shoulder. And then when price comes back down towards that neckline, which would be around March, of next year, that's going to lead to the breakdown. And then you're talking about $38,000 Bitcoin. Okay, so $38,000, what's very interesting about that number is it lines up as well with the high time frame fib retracements. Let me just have a look on my right-hand side chart here to pull this into view for you. So it lines up very similarly, that head and shoulders pattern, if it does play out. You can see over here, you got your super fib retracement, 0.886 to the 0.786 fib level. And that is situated between $28,000 and $39,000. And where is this price label? Let's actually price label it over here for you. There we go, $38,000. So $38,000 takes you just below the 0.786. This is where every bear market, and I think we might have this labeled over here. Let's put these ones on as well. So this is where, wait, let's clean that up a little bit for you. Let's remove that one and have a look at the last one. This is where the bear markets have mostly bottomed. If you look, for example, 2018 from bottom to top, back down into the bear market, you tag the 786. The next cycle, or the cycle before that, I should rather say, cycle low, rallies all the way up to $19,000, bottoms between the 0.786 and 0.886. So a lot of confluence that this will probably be playing out. This is your most likely outcome if you do get the bounce, is that's going to fail. And it just lines up with confluence between those fibs, right? Pull that fib from high to low. And that's where I'm getting that right shoulder number from, between the 50%. And maybe in an extreme scenario, you rally up about to the 0.61865, which is about $108,000. So give or take, this is going to be where you're looking to offload spot if you're somebody that's caught within those positions. Remember, as traders, it's wise to reserve the right to change based on what the new data looks like. So if, for example, things start to look bullish based on various different outcomes, great. And it looks like we're going to move to all-time highs. I'll update you on that. But as of right now, it looks very unlikely you've broken the parallel channel. You've closed a high time frame candle below that, and you've now opened another candle below that. So any bounce that occurs over here is an opportunity for anyone stuck in positions, in my opinion, to offload or de-risk some of that. And then you're going to be looking for low prices in the future. And just to be clear, this takes time, right? This will definitely not happen overnight. This is months and months and months away, possibly even 11 months away, right? 11 months away before you do see that low, if things play out like they historically do. Now, that doesn't mean we won't take short-term trades. The short-term trades are there. We spoke about it yesterday on YouTube. We said that, you're looking at this green dot buy signal over here on the momentum oscillator, price moving towards the upside. And if you're lucky, you'll just grind your way up into these resistance zones, which is what would form that right shoulder. But I think it's going to be a very sloppy, difficult ride all the way up. I don't think there's V-shapes coming out anytime soon. What you want to study in order to confirm if that right shoulder is in fact taking place and things are going to reject, what you want to look at is the volume. So off of this move towards the upside, if the volume is just lower and lower and diminishing over there, that tells you that almost certainly this is going to be a right shoulder and a rejection from the breakdown level and giving you a final opportunity to exit the market. I guarantee you at that point, everyone will be calling bull market back on if we do get back into those zones, by the way. Everyone will be saying that. So you're also dealing with your death cross over here, which does tend to act like a magnet that can pull price back into that. But it's lower lows and lower highs until you can get back above 107,764, which is another one of your clear signals, right? So another clear signal that you need to see is a reclaim of this level. If you can do that, great. Now, I don't think that you do that in one line. I think that what will probably happen is we'll reevaluate, because you'll probably come into this zone and then you'll reject. And then what's going to happen is we're going to lower that level. We're going to take our pink box and say, well, now that's the new level to reclaim. And then maybe you'll put in a high low and then recapture that. And if you do that, that would be a sign that the worst is in fact over. But for now, you have to assume the trends are going to continue towards the downside, and any counter trend move that occurs over here opens up a short trade opportunity. And then you're going to be hoping and praying on that next downside move that it just leads into a higher low. And that's months away, right? This is not going to happen overnight. These are daily charts. It is going to take a long time. Now, we're trying to play all the little moves in between. I did update everyone in Whale Room yesterday saying that, bulls and bears are fighting for their life over here, trying to take control of the daily exchange volume and keep it towards the upside. This is where we took the long trade based on the rejection over there, price coming down over here on the hourly time frame and breaking that long-term downtrend, recapturing some of those key levels. And then you had this beautiful fake out towards the downside, and that's where the long trade opened up. So this is what we're looking at yesterday in whale room. Price has since traded just above Monday's high. So there it is, or around Monday's high. That was the Monday high. So now you need to eliminate the risk. Why do you need to eliminate the risk? Because of this chart. I just told you, right? If USDT dominance breaks out over here, well, you want to have your risk eliminated. So if you took that long trade with us in whale room, move your stops to break even consider taking like 15% profit over here. If you do, of course, break out over there, what is that going to lead to? Well, that's going to lead to Bitcoin breaking down. And I'm going to delete this guy. Actually, we won't delete it. Let's not delete it. What we'll do is we'll hide it. So we still have it tomorrow. What you're going to be looking for is which side gets swept first, Monday low or Monday high. So if you're in the long trade and price rallies towards the upside over here, takes out Monday high, breaks back below, that's the key part, right? If it breaks back below Monday high, rallies up, breaks back below Monday high, take your profit. Close the long trade over there. Even consider flipping short with your stop loss above, enter into the trade there, and then you're going to trade it back towards the downside. So it's always a question of which one comes first. One of these sides will break. It's just which one breaks first. When you break the top side first, it means it opens up the short trade. If you break the bottom side first, you'll be looking for the long trade over here. You have confluence of that 50% level at 84,298. And basically, that's what you're looking at. Price coming down, recapture that, but study the USDT dominance. Because if the USDT dominance is doing this, for example, that creates the sweep below the Monday low. But if USDT dominance is holding this as support, well, that can create a whole lot more damage because you're talking about a high time frame, fourth time breakout, which increases the chances of this type of a move, right? Let's just grab our tool. It increases the chances that this could move aggressively into that zone. Alrighty. So a lot of moving parts. I know it's a lot to consider. That's why I jump into whale room, guys. If you do want to learn more, there is. Oh, I forgot to check. Let me just quickly see if I can grab my list without doxing everything on the screen. 1 second over here, guys. Let me grab my list over here to see what sort of capacity we're at in whale room. Okay, we can move this back. Let me just have a look over here. Alrighty. Whale room, where are we? Let's grab this list. Okay, we are at 87% capacity. So if you do want to join into whale room, we are 87% full. There's a couple of spots that are still available. It is Black Friday, 48% off. For anyone that jumps into whale room, scroll up in my section. There's an additional added benefit surprise that you guys will be getting. I'm not announcing it on the YouTube videos, but if you're in whale room, you'll find it. If you just scroll up a little bit, I think I announced it on Saturday. So scroll up to Saturday. All of you will get a special additional bonus, a benefit that's high value add. I don't want to say what it is, right? Because it's limited only to whale room. So a special offer, 48% off. Use the link in the description below. You can also, you need to apply the Black Friday code. That's very important. Copy that and apply the Black Friday code over there. Otherwise, it's not going to issue that discount for you. For anyone that's on mobile device, if you do want to join, just scan that code. There you go. Just scan that code over there and you can jump in. Our traders are absolutely crushing it. Chris copying me, definitely copying me. Look at him. He was only awake at 3:35 a.m. because he's in the US. And then he took the Bitcoin long that I gave. But he is a good trader, so we'll give him that. He's probably watching this and laughing now. He has also been short on Lincoln Hype as well, so some other great trades over there. And then, of course, guys, you also have, the traditional market. So if you want to trade, things like gold and stuff, this trader is dedicated purely to just trading traditional markets, gold, silver, etc. And he's making daily profits now, basically transition into full-time gold trader. Okay, cool. Let's have a look at a couple of other things. Let's see what's going on over here on the liquidity chart. So not that big. Remember, the daily we consider large liquidity, anything over about 25 million. Right now, you're sitting at about 17, 18. So it is starting to build. But when you compare the daily liquidity above and below, you can clearly see the above is thicker, which does open up the chance that maybe are going to sweep that Monday high. Let's actually see where that is. 89,450. And we'll go back to this chart. 89,450 is here. There you go. So what does that mean? That is your liquidity void, right? So on the low time frames, if price can get another big move up, and you sweep into that and you reject, what do you have? Anytime that you go into liquidity and you sweep that, you take out the liquidity and then you usually move in the opposite direction for the low. So what we saw, and I outlined this yesterday for you guys, is that most of the time it's on either Tuesday or Wednesday that you see price come back down and full retrace, sweeping the Monday low. So I think that be careful on the long side. That's all I'm saying. Be careful on the long side if you are trading long. Let's see the weekly liquidity and what that's looking like. How has this changed over here? Weekly liquidity, about 70 million, and that's coming just under $90,000. It's okay. It's okay. It's not big enough. The rest of the market, it's all going to be the same thing as Bitcoin. So if your bias is long for Bitcoin, you can start to look for much higher risk long trades on other coins. If your bias is short on Bitcoin, you'd expect altcoins are going to go down even further. And if you look at ETH, of course, struggling over here. But if you can start to spend some time and flip the 618 into support, then you can challenge that $3,171. Quick look at Solana. Same thing. It's still a downtrend, guys. Just to be clear, this is a complete downtrend. Lower lows and lower highs is the name of the game. It is overextended. You can put in a bit of relief, but you're still going to struggle to get through these zones. 150 for Solana. That's a big level. XRP, downtrend. Lower lows and lower highs. Also mark out the mid-range of this just to be sure. So I would go with range low to range high. And I'm just going to mark it off so we don't have too much mess on the chart. We'll go horizontally there. There we go. And I'll make it nice and thick for you to see properly. So that is 250. That's a big level to reclaim. 250 is your mid-range, and it happens to be on XRP exactly where your previous lower high is. Okay, Sui to $2 would make your week, says Nima over there in the comments. Look, very aggressive downtrend. $2 possible. That would be the relief rally. If you put in an aggressive relief rally, this could easily come up to $2. What I think that all of you should do is you just have a look at where the last lower high is, and then mark that off using your fib retracement, last lower high, pull it down to the low, and then you're going to be targeting conservative target, 50% level. More aggressive target is going to be at the 618, and we'll change the color to not confuse you. Therefore, that becomes the most likely rejective zone, which is just below $2. In extreme scenarios, you might run a little bit higher, for example, up to the super fib retracement, which I'll throw on there now, the 786 and the 888. That's a much more extreme rally. Okay. So SPX. SPX is also very, very damaged. But if I remember correctly, it is at a major support level. So let's have a look at that. SPX 6900 kind of swept that zone. You know, you could put in a bit of relief over here, but very likely it's going to be met with major resistance, and then it's just going to get faded. So even if you bounce over here, you're probably going to do something like that. And I think it's over. Like, that's it. That's the truth. If Bitcoin's not going to rally and Bitcoin goes into a bear market, it's just low probabilities. Not impossible, but low probabilities. The only way that there is a possibility is if Bitcoin dominance puts in an enormous breakdown all the way to like 39.4. You can see Bitcoin dominance still looks like it wants to work its way down here. And I would say the most logical next support is going to be that 52% region, which is coming into clearly your mid-range over here. So that level over there. 52% is the logical support for Bitcoin dominance. Okay. What else? What else, guys? Let me check out your comments over here. Let's see. Okay. What else? Cool. Just checking if there's anything specific that you guys want to have a look at today that I haven't pulled up. Please do vote as well in the poll. It's always great to know what your mindset is, where your thoughts are. How high will Bitcoin bounce from here if it is going to continue? 19% of you don't even believe it's going to bounce. We have bounced about 8% from low to current price. 10% more. So I'm talking from current price, how much further? 31% of you believe we'll go another 10% higher. 23% of you believe 20% and then down. And then we got 27% of you that are saying lows. Lows are in, right? Lows are in a new all-time highs in the next few months. Okay, so still some really bullish people over here that believe new all-time highs. I've shown you what needs to happen there's a lot of work that needs to be done. Just understand that when these moving averages cross over, and I'll throw them back on over here. I got the 3, the 9, and the 30 moving average specifically on, and let's clean all of this up as well. Let's take away the head and shoulders. We'll remove that. We can leave the fib over there. All of that's fine. When these high time frame moving averages cross over and you've met the timing cycle end, which you have, 4-year cycle theory, right? 3 years up, 1 year down. If you believe in that, well, you don't want to fade this momentum towards the downside. Of course, you can get bounces, but it's extremely unlikely to make it back above the purple moving average, which is going to be your 30. And you can see over here from the price cycles, right? Once that trend starts going, once you start to expand and they start to separate from each other, which they are doing right now, yes, you get little bounces, but like that, I said, you'll struggle to get above the 30 moving average. That becomes all of your major dead cat bounces. And in this instance, you can see over here, you had aggressive move down, you created a bear flag, and that fulfilled the move lower. And that would be the most likely outcome. Okay, so yeah, bulls have their work cut out for them. So to get bullish, you basically have to start to recapture these things and turn them back towards the upside. Now, of course, there were choppy periods in between, right? There were periods where these moving averages were lost. But if you're watching me back then, and you can go back to any of those videos and see what I said on the low, on the 3rd of August, what I say on the low on the 6th of April, I would have said this one, I would have been a little bit cautious because this one was close enough to the timing cycle end. But for all of these, I said, just ignore. I don't even know if I would have brought these charts up. I would have said, ignore that, ignore that, ignore that. You're still going higher because we haven't met the timing cycle end. Okay, so just Rich says, indicators are laggers too. Yes, but you need to know how to use them. Of course, if you use them, like if you use them in terms of you wait for a bearish cross or something, of course, it's lagging, but you need to know how to use them. For example, how do you use it? Well, if we go over here to one of these, to this one over here, you've got the death cross. All that this tells you is that the next rally that goes into that becomes extremely probable to reject. So as these move towards the downside like this, the next rally that goes into it becomes a high probability short trade. Stop loss goes above there, and you just keep riding the trend down. So it's all about understanding how these things work together. And then, of course, it's lagging in the sense, like if you're like, oh, as the death cross happens, I'm selling. Well, you would have sold over there. Price would have come down a bit more, but it's probably going to bounce. So in that regard, yes, it's a terrible way to use them, but you need to know how to use them. That comes with experience and understanding the markets over time. Okay, for those of you that want to take advantage as well, guys, there is a gravity competition that's running right now. I'm still in that Zcash longs. Unbelievably, I'm up still 1,800%, but I've taken about 90% profits over there. So the last 10% is just a vanity metric to watch it ride up and take a screenshot and share it like a hero, right? That's all that it is. But if you want to actually take active trades over there, they're currently running a big competition where you can win $15,000 in prizes, and the link is below. So if you're not trading over there, the main benefit of trading over there, by the way, is not necessarily to win these trading competitions, but it's that you're raking up gravity points. So when they do an airdrop for the token in the future, you might find yourself getting free money. Now, the reality is, yes, they're probably going to launch into a bear market. But the good news is that it doesn't cost you anything, right? If you're going to take that trade anyway, you double down, you possibly win a competition, and you get the airdrop points. So link is in the description below for Gravity if you do want to take advantage. Okay, alrighty. Okay, let's see. What else? When can we short Zcash? Let's go to Zcash over here and actually have a look. So we did speak about Zcash yesterday, and I'll go on the lower time frame. Well, I mean, maybe then, right? Maybe this is distribution, because yesterday you did get a rally up, and I told you the 50% level, which is the purple line, is going to be incredibly key. And whether you're a trend trader or a range trader, your bias and thesis would still be the same thing. Because if you're a trend trader, well, you would have said lower highs and lower lows, and therefore this is the lower high. But if you're a range trader, well, you also would have said, you know what, this is coming into mid-range resistance, and therefore I can only be bullish if it can reclaim and capture that and then make a move back towards the upside. So therefore, you know, this is starting to shift more and more bearish each day, because lower highs and lower lows, there you go, lower highs and lower lows. And in terms of the range low, you know, you're coming into this area multiple times. So the next time you come into this could break it down. And then I think this can retrace all the way back to 300 is going to be in big support at 300. My trade entry is below 300, so I'll just leave that last 10%. The stops are at break even, and whatever happens, happens. The good news is we're basically selling at the exact top over here. And that's not necessarily due to insane technical skill. It's not like I looked at the chart and I was like, this is going to be the exact top. It's just that I made a lot of money and I was happy to take it. At the end, I was just happy with the profits. Sometimes that's how it goes. Price did run back up over there, but more resistance over there, more selling pressure. And I said, I don't believe that this will run beyond December. That's on record. You guys can go and look at that ahead of time. While price was already bullish over here, I said, I don't believe that this will continue making the all-time highs after December. I believe the top will be in. Okay. All right, what is the best oscillator out there? There's a lot. It depends on the time frame that you're utilizing. So, valuable momentum oscillators are things like the MACD is a pretty good one on the high time frames. Very, very, very useful. Think of high time frame momentum oscillators like an oil tanker ship that when it starts to turn, it's unstoppable, right? It's committed to turning the corner. And that's basically what we've seen. And this is what we spoke so much about. Where's that chart? Let's quickly see if I have it over here. Where is our oil tanker chart? I think it's on this side. 1 second, guys. Let me have a look. We need to bring that into view. Here it is. Here it is. So here's our MACD. We highlighted when the weekly crossed, we said, no, could be trouble. Then the 2 weekly crossed, then the 3 weekly crossed, and now the monthly's crossed. And in order to avoid this, I believe Bitcoin has to run up to something like $97,500 to avoid this death cross or bearish cross, right? So as the one comment said, a lagging indicator, of course, but this is how you use the lower time frames and that something is coming, right? So it's not like we started to exit the market only now because you got a monthly cross, bearish cross, right? That's not the case at all. We foresaw the possibilities, and this just now adds and stacks to the confluence of what may happen next and paints that picture, for example, on this chart that, if that monthly is crossed, this is how you use these indicators, right? This is how you create them or make it valuable. That any bounce that occurs over here, you won't be fooled because you're going to get that monthly cross. There you go. And we've never, ever, ever seen Bitcoin rally to new all-time highs after a bearish monthly cross on the MACD. Price continues towards the downside, right? Okay. Alrighty, mid-ranges don't exist. I don't know. I completely disagree. They work all the time. I use it. I make money. I've made so much money off of ranges. Like, remember that the market ranges for 80% of the time at least, and it only trends for about 20% of the time, which means that 80% of all your opportunities in markets are going to come off of range trading, which means you probably want to focus on where the range levels are. Works very, very, very well for me. Speaking of ranges, if you're looking at the Monday range, you can also mark out exactly where that mid-range level point is coming in, which is now. Okay, so if this is going to bounce, you probably want to see that mid-range hold and then make its way back up to the high. Okay, so there we have Just Rich coming in now saying that ranges are the best, but he doesn't like indicators. The other guy probably loves indicators and hates ranges. So we got a lot of differing opinions over here, but that's fine, right? There's different ways to trade the market. I always think of it like this, right? You would never take a Ferrari and try and race it on gravel, on dirt roads, right? In a World Rally Championship. You just wouldn't do that. That's not smart. But you also wouldn't take some sort of a pickup truck and try to race it on a Formula One track. You would put a Ferrari on a racetrack, on a tar road, and you would put a pickup truck in a race for World Rally Championships. That's kind of the way you want to think of ranges and trends, right? You need to apply the right strategy to the right market conditions. Now, obviously, I've taught this many, many, many times before, but maybe some people are new, so I thought let me just mention it again, right? Okay, guys, if you are a range trader, though, take advantage of Bitfunded, right? The ranges are going to give you plenty of opportunities. The Monday range trading strategy alone will give you one trade a week at least. And that's only on one asset class. Remember, you can go across, all of the various different asset classes. For example, if ETH rallies up, look at the confluence that you have over here. For ETH, you have this key mid-range point taken from the high down to the low. So that's a significant level. So if you rally above the Monday range high, expect that that's going to sweep that. And then you can start to look for the short trade, right? Back down to the Monday low. So that's a trade you could take on Bitfunded over there. And you can look across all of the different charts, right? I'm just saying at least one trade a week comes from the Monday range trading strategy. You could probably even get more. You can probably get much, much, much more than that. Look at this. This is heavy, right? Sui, look at that move up. This thing's going to nuke. This one's going to nuke for sure. I think this one's going to come down hard. So this would be a short trade. So we can just mark that out. Look, I would probably already start to scale into a short trade over here. So you want to inverse pyramid this, right? Inverse triangle over there. So start scaling into the short trade over here. High probability you're coming at least down to 145. When you see a big move like that, this thing's going to be full retraced. You're probably going to do this, bounce. Let's draw that out again. You're probably going to do that. And then you're going to sweep the Monday low. Okay. So, and if you're lucky enough to get this on Sui, that would be the optimal, the sweep of the Monday high. So just go through the list, right? Go through the list over here and look for opportunities. Another one. This one's already come down so much on Sonic. Say, Cardano already come down a lot. Here's a nice one, AVAX. Very nice one. Put on your watch list. This one's probably going to dump as well. Look at this move up. All of this is going to be retraced, at least midpoint. Look at the size of this Monday range. This is absolutely huge. So from top to bottom, you know, that's a 6% move. That's pretty big. And if you can get a long trade back up to the Monday high, almost 7% as well. Big moves there. Let's see. Ton. Okay, already retraced it. Too late. Wow, Casper, big move up over here. Look, you're very far away from the Monday high, but I'd also keep an eye out on this one for potential short trade if you break structure. So you need to see something like this on Casper, right? You need to let it continue to extend, let it break down. As soon as it puts in that lower high, you can go for the short trade into the Monday high. It may even lose all of that. Tron. Nah, skip it. Skip it. Yeah, skip it. These things have already played out a lot. I'd skip it. So yeah, stick with the majors. I think the majors are going to be the best option. So I've given you already a few examples over there. So remember, guys, there is the Black Friday special. 5 days left to go. Is that correct? It feels like it should be less. Let me refresh this. I feel like it should be less than 5 days already. Okay, you got 5 days. You got 5 days. It is half price. Buy 3, get 3 for free. So you buy 3, you get 6. 100% profit split. That is your most important thing. Please make sure you understand how to trade prop firms first, right? Read all the drawdown limits and things like that, right? There's certain rules. You need to understand the rules. If you're not playing according to the rules, you basically bought the challenge for nothing and you're just going to throw the thing away. So be very, very, very careful. That's the first thing. Second thing is there's no rush. You don't need to buy a Bitfunded challenge and take the trade today to try and make all your money back. Just relax, right? Let the market come to you. Just wait for things to cool off. Let the market become a bit more predictable. And when you have high probability trades, take those. Bitfunded can teach you a lot of discipline because you actually have to trade like a real trader, right? You have to respect the max daily losses that you're allowed. You have to respect the max drawdown. You have to calculate your risk management on each trade. Yeah, I think it's a great opportunity for those of you that want to take trading seriously. So links are below. Remember as well for Whale Room, if you do want to get in, we're almost at full capacity over there. The last couple of spots, I think it will be sold out by before Black Friday even starts. And then we're going to close the group, and that's it. Remember to scroll up in Captain's Take if you do join today. Go and look at what I said on Saturday. There's an added benefit or bonus for those of you that want to join, right? Something extra that I'm not mentioning on YouTube. So that's it from me, guys. I'll see you all on the next one. I hope you all have a wonderful day wherever you are in the world. Stay safe out there. And remember, the trend is your friend until the end of the trend. I'll see you on the next one. Have a good day. Cheers for now.